Rosemary Thomas with Remax Professionals, coming to you in the area code 775. And my great friend, Rusty. Rusty, who are you?
Hi, I'm Rusty Maihara with First Choice Loan Services. Been in lending for about 20 years.
20 years.
Too
Okay.
long. Way
too long.
Way too long.
So you might know a thing or two, huh?
Try to.
No pressure.
Yeah, fake my way through it.
No, honestly, we've done several deals together,
Mhm.
and I appreciate your patience in walking me through and all that fun stuff
It's
when
always a
we're
pleasure.
going through the transactions. But you guys, we're going to be doing a series once a month about how to build your portfolio. Yes, I know. Us small-time people here want to know how to build a big portfolio of rentals. How do we get started on that? And that's what we're going to talk about today, you guys. And I have Rusty, because he's the professional in this area. My number one question is, somebody like me who maybe just owns one home,
Mhm.
how would I get started in investing into other homes to rent?
Well, if you own one home already and you have equity in the property, that's a good way to start.
Okay.
Because that equity is a good source for a down payment for an investment property.
Okay.
Because buying an investment property, generally the biggest hurdle for somebody is coming up with the minimum 15% down payment.
Okay.
So if you have that equity in the property, we can access that in several different ways. Equity lines of credit, second mortgages, cash out refinances. We can all leverage that equity to use for the down payment. That's a perfectly acceptable source.
How much if we were to buy our first investment property, how much do we have to put down on that investment?
That's a minimum 15%.
That is the 15.
Yeah, that is the minimum. Generally like to see 20% because then you
Okay.
avoid the mortgage insurance associated with the loan.
Yeah.
But 15% is your benchmark.
Which we'll talk about more later, which is the ROI and things like that that makes sense in a rental. But to get started, we're really going after tapping into, if we already own a home, tapping into the equity. And you said there's
There's several different ways.
Okay.
Cash out, you can do a cash out refi where you refinance your first mortgage, access the equity. You can also do a home equity line of credit, which is a revolving line of credit, second mortgage, or you can do a fixed loan second mortgage.
okay.
Those are all several different ways to do it.
Talk about those three ways. What would be the benefit of doing the first example, second example, third example?
First mortgage, you always can borrow money at the lowest interest rate
Okay.
because it's an owner-occupied loan and it's one loan. Whereas on a second mortgage, it's a riskier loan for the bank, so you get charged higher interest rates.
Ooh. Which we don't want to do. We'll dabble in that in the ROI, depending on how it works out on paper. What would you say is the most common way to do it?
They're all commonly used. It all depends on your future goals, what you're going to do. Generally, I like to do it on a first mortgage just because you get the lower interest rates. But if you leverage a home equity line of credit, that's an interest-only product, so the payment's not quite as high.
Okay.
So it's all unique for each situation.
So what would we be looking at if we're starting to think about this process? We have a little equity in our home. Do we need to make a whole bunch of extra money in order to purchase this, or how do we qualify for this?
You do not. That's the great thing about an investment property. On a conventional loan, you can use 75% of market future rates
Okay.
for rentals to offset the mortgage payment.
How come only 75?
Because you have to account for maintenance, you have to account for vacancies, you have to account for all the extra charges that go along with rentals.
Okay.
Right, so
Which makes sense.
Yeah, so we have to account for that. So we can't give you the full rental, but 75% usually easily covers the mortgage payment.
Okay. When we get that step down, this is kind of the same. So we're leveraging our own equity in the home that we have to start building our portfolio. Along the same line of that, how can someone use their equity to help them upgrade their primary residence and keep that one as a rental?
Same thing. What you can do is you can use home equity lines of credit, cash out refinances, fixed rate second mortgages, all those different tools to access the equity to do the renovations if you want. And then when you leave that primary residence as a departing residence, you can use rents to offset that mortgage payment as well. So
Okay.
basically, if you're doing a rental purchase or vacating your owner occupied property,
Yeah.
you can generally offset that mortgage payment so it doesn't affect your debt to income ratio. So it helps you qualify.
So we can do either way. We can stay in our home and just use the credit or equity to get that down payment on our investment, so we can go buy what would turn out to be a great ROI, which we'll talk about in the future, a property maybe not in our town or maybe not in our neighborhood, but we can go take that, or we could take the home that we bought originally. Maybe we've grown a little bit, our family, or we've added a couple additions to our family, and we're outgrowing that, but it was so perfect as we just started. We can keep our home as an investment, but take the equity and then go buy our new home?
Correct.
Okay.
Correct, and you can use you can use future rents to offset that mortgage payment, 75% of them.
Do you see a lot of this happening right now?
A ton. There's a lot of equity out there
Okay.
that people are accessing. So recently rental rates have come down a little bit, so I'm not seeing it quite as much as I was, but
Okay.
people are still doing it for sure.
Okay.
Yeah.
So it's something that
It's
is
very
happening
common.
every day that
It's
we
very
can
common,
get
yes.
into this.
Absolutely.
Okay.
It's very common.
This is why he's here. He will not scare us away, you guys. He will teach us the way. I'm just reading questions from the past as we've gathered them. Tell me about how mortgage affects their debt to loan ratio if the mortgage is covered by rental
Yeah.
income.
So like I said previously, we can use 75% of rents to offset that mortgage payment. Okay.
So 75% of what you're getting from that rental.
What the future rents, yep, exactly. So what we do is we get what's called a rental survey, and that comes from the appraiser when they do the appraisal. And what they do is they find out what the market rents are. We take that number and we multiply that by 75%.
Okay.
That's your income. That's your rent that you can use to offset.
Now taking a big curveball that we didn't talk about.
Oh.
No pressure.
Great.
If we're going about it and we're looking at just staying in our home because we love it, what kind of home should we be looking for to have the perfect rental situation?
So basically what you're gonna want is you're gonna want something that's on the lower end for purchase price, but is in a good neighborhood commanding good rents.
Okay.
That's gonna be your best bet. Ultimately, at the end of the day, the smaller loan that you have to get on the property means lower mortgage payment. If you're making a lot of rental income, that's great rate of return.
In this case, that would mean not getting a 300,000 square foot and renting that out is probably not our best.
Probably not.
Okay.
Probably not. So
So
yeah,
that
I mean,
would be
it's very neighborhood and property specific.
Okay. So it's good to know though, because that would help your decision if you want to
Absolutely.
stay in your home or not, turn it into a rental.
And that's where your mortgage professional comes in handy. He'll calculate mortgage payments for you. The realtor will figure out what rental rates are going for in the area, and we'll work together as a team.
And it's always coming down to this team that we're talking
Absolutely.
about. We have lots of different things that we do behind the scenes that we're talking to each other throughout the transaction, and it's just as important if you're trying to buy an investment as your own home to have that communication between the agent, the lender, the title company, and then if you're getting into the rental business, it sure helps to have a property management. I don't know if you know, but I have several connections with the property management. Before real estate, my husband and I had done carpet cleaning business. We opened that in 2006, very successful, made lots of friends in that industry. So we know several, depending on what town you're looking in, that will actually look out for your best interest when they are managing your rentals. So just a little side note, I do have a few qualities here and there. So Rusty, we're talking about this once a month, and I just want to thank you for coming down and chatting with
Absolutely.
us. I know that several people are maybe taking their money from retirement or different 401ks. Would this be a smart decision right now to do that, or should you have any ideas on that?
It all depends on the rate of return that you're getting from your investment. Right?
Okay.
That's a conversation generally to have with a financial advisor. Just find out if it makes sense to move money from any type of investment into a property investment.
Again, when we're talking about that team, and I'm sure you
Yep,
have a few that
absolutely.
you work with.
For sure, absolutely.
With some of your investors. So I think that the number one thing is that we're kind of just nervous about this. We see this online and we see all these things going on, but it's really possible. How long, if we had our primary residence and we had just dabbled into getting our second one, if home prices were going up at a normal market value, 3 to 5%, how long would we need to wait for our second property in order to pull equity out of there to get the third piece of property?
It all depends. It really depends. It really depends on how much equity you start off with the first property.
Okay.
So, I mean, that's just something that we have to look at on a case-by-case basis to analyze how much equity we can access, how much we're comfortable accessing. I mean, there's a lot of different factors that go into that, because some people are more comfortable pulling more money out of a primary residence and a second investment property or whatever, where others are not. So it's each on a case-by-case basis.
Okay.
On how quickly we can accelerate that.
And we don't ever want to get anybody into a situation that all of a sudden a little thing changes in the lifestyle and then the whole thing comes crumbling. Because the thing about this is to build a solid portfolio to help you have that portfolio to make income eventually. So would I be, if I have my primary residence and it's only a third of the way paid off, would this be a good time to invest?
It depends on how much, once again, it depends on how much we can access.
Okay.
Because if we do a cash out refi, we can go up to about 80% loan to value, okay?
Okay.
Some of the seconds will go a little bit higher, but it really all depends on how much we can access at that point.
Okay. And we're going to dive into ROI quite a bit next time. But in the sense of, to make it make sense, just a small little idea of if we had our house and we know we can cover that payment, we're taking a little equity out, what would we need to make sure that we wouldn't come into a problem if we need to basically compare rent to the home's value and your loan amount? How would
the mortgage payment?
What do you do on that?
Okay, so basically we want to make sure, generally what I go by on my personal investments is I would like to see 6 to 10% ROI. Okay. That rate return on investment. So basically what I want to do is at least 6%, get at least 6% return on my money at a minimum. Okay. Depending on what all my other investments are doing, but 6% is usually my benchmark. Okay. On the rate of return on that mortgage versus rental payment.
If you get the home and it is a 6% and things happen in the market, what kind of steps would you do to get that ROI back to 6%? Would you pay more on the principal and interest, or how does that look?
It all kind of depends on that, because if you're paying more on principal more towards principal, it's not really affecting your mortgage payment. Okay. That really isn't going to affect your ROI based off of the rental income that you're receiving. Okay. So, I mean,
what does affect it?
A lot about the market. Okay. Right, rental market, you know, so that's why you want a really good investment to begin with, a really good property.
So it's all on finding the investment first, and then to get started with this, and if they just want to have a conversation of, maybe we're not ready right now, but this is something that we thought about and want to do in the future. I know that we're working with several that have bought one with us, but want to dabble that in the future, and you're already talking with them on how to make that next couple steps to prepare to make that first investment. One thing we want to make sure not to do is buy other things on credit if this is your goal, I'm imagining.
Correct. Okay. Correct. Definitely what you want to do is you want to start speaking with a mortgage professional, real estate agent ahead of time, so that you can get all your ducks in a line, make sure that you're prepared to do it. Okay. That's the first step.
Generally, when they, if they're just starting out and they're having that conversation, is it too early if it's a year or two out?
It's never too early.
Never too early.
I've got clients I've been working with 2 to 3 years.
On it.
Yep. It's never too soon. Okay. It would always be better to be prepared.
And know all of the ways you can go in it, because we can't
There's a lot of different factors.
Yeah.
There's a lot of different factors.
There's several ways to go. Yep, would you say that a single residence is the best way to start, or would you be looking at a condo?
Once again, it all depends. It all depends, right? I mean, it's not cut and dry for everybody.
Okay.
I mean, there are some condos that are really good, there are some condos that are really bad, same with single families, so it all
Okay.
really depends.
So starting having that conversation for that individual and which way works best for them is really the only way to start.
That's the best way to start.
And how would they start with you and get a hold of you to have that conversation?
They would give me a call on my cell, it's area code 775-342-9435.
And this is his personal cell, everybody. So write that number
Yeah.
down. It was what?
775-342-9435.
Okay, I absolutely love that. And I love that when I'm really putting somebody forth here, it's because I've had experience with them before, most of the time, several times, and we have a great communication, and I know the kind of work you put forth. I know the heart you give into it as well, and there's never been a time that I haven't called you, and at least you have texted me, said, I'm in a meeting, I'll call you right back. You always answer right away,
Always.
and tell me what's going on, and I'll always get back to me. So I do want you guys to know that if you're wanting to start the conversation about building your portfolio, even just a simple text, hey, I would love to set up a meeting with you, he will make that happen. And of course, when you're same goes for starting that conversation early. If you want to start that conversation,
Same with you.
Yeah.
They should be calling you as well.
I was
right?
yes, just about to. I was setting you up for that.
Exactly, right?
To have a conversation with both of us way before you're even starting that process is actually a really big benefit because you just want to make sure that your investment is in the right place. So many things can change, but working with somebody for several years is never a waste of time. And this is why I love doing these, because I want to break that mindset of people wasting our time.
Right.
We don't care if you
Yeah.
waste our time. Talk to
Never
us
waste
first.
of time. Never.
So we're going to be doing this once a month. Talking about building your investment portfolio. And if you guys weren't able to join us today, type your questions in below and we will make sure to address those on future videos. Again, I just want to thank you so much for coming
Absolutely.
down.
Thanks for having me.
So
Appreciate it.
excited. And by the end of the year, you guys, you will have so much knowledge on how to build your portfolio. I'm just so excited, can't stand it. Again, just your information.
Rusty Maihara, First Choice Loan Services, area code 775-342-9435.
And as always, Mary Thomas with Remax Professionals coming to you in the area code 775.